Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Thursday the 16th. Well, it happened finally. Dees corn finally made its way back up to the 100-day moving average at 473 and a quarter. The first time it was there, we went to 74 and a quarter. We missed the 62% retracement of the 80-cent sell-off. The whole year sell-off, we almost hit the 62%, which is at 475 and three quarters. So this is an opportunity for anybody out there. Um, I'd much rather sell grain up here at these levels than when we were down at 425. I know it's not 550 or $6, but if you need to catch up on cash sales, any sale above 481 is in the upper 30% of prices available this year. Is 74, is that close enough to 81? Are you going to worry about the 7 or 8 cents? Everybody has to make that judgment. But it's certainly, if you are in a situation where you were chewing your fingernails off, we were down at 425, hitting 473 overnight is a good recovery. So use it if you need to. Um, Nobody knows where the highs are in yet or not. I don't know. We could still keep going higher. This market's very, very squirrely. But good news is we're up here and we're not, sub 425 where we were right before the June 30th report. So, nobody's got magical powers. But when you get a rally like this, please use it. Please use it. Please use it. At least go out and look at defending 450. I think I'm going to talk to guys today. We have a lot of 425 and 430 puts on. If we can stay up here around 475, I'll look at replacing those with going from 30 to 50. I'd rather go from 30 to 70, but for that to happen, we'd need to hit 490 corn probably to roll those puts up. But it's a good development. Take advantage of it. Novi Beans hit 1206 and three quarters last night and then fell back. We have yet to take out 1214, which was the high of the year. We are trading at 11.99 right now. So right now, Dees corn down a penny, 468 and a half. Novi Beans down two and three quarters at 11.99. I just think the robots sold the rally. We'll see where we are when the real market opens up in about 45 minutes. March wheat, not March wheat. September Chicago wheat went back up, hit 698, right? 698. Is that the high of the year? No, it's not. The high of the year was $7, which was back on May 14th. So what a recovery. What an opportunity. If you're not at least 50% sold on this thing, I think you need to. Also, now with us trading $7, take a look at defending at least 650, 670, if that works for you, if you're going to store grain. A week ago, we were down at 580, right? 575 actually. So for goodness sakes, reward it. I know you're all long. Farmers are always long wheat. Use this rally. You should have been, a scaling seller. And again, can we go to $8, $9? I hope so. If you're scared about that, if you're selling into a rally, which let's face it, we were down at 575. Now we hit $7. Already we're back down to 680, 677, 670, yeah, 677 and a half. So you want to reward the rally with cash sales if you need them. And if you do make the cash sales, you're selling into a dollar plus rally. Okay, hold back 20 cents for a call option in case we do go to $8 or $9. I'm not going to sit here and tell you we can't do that. I don't play that game. What I want you to do is make the best cash sales possible. And this is a wake up call. Moving over to the protein complex, we're going to find out today, are we going to continue to drift lower or not? We've taken out some key technical support in the on the retracements, especially in August fats. August feeders are right on the verge as well of either making it or breaking it. So the next couple days, it's make or break. Cash cattle was $10 lower than it was last week. And don't waste your time looking for the cause of the sell-off. Just defend what you can as best as you can. And this is when using options is a much better strategy than using futures, because with the way cattle's trading right now, if you decide that you want to sell futures right now, we could very easily move 15, 16 bucks either way. And if you sell futures here and then we rally 16 bucks, you've cut yourself out of that profit with your animals, right? So I'd much rather be using puts here right now. If you buy the put, you stop the bleeding, but you leave the upside open. And this market has had a pretty big sell off as already, especially you go look at the deferred months. Are we going to go test the June 4th low out there on Novi feeders? I don't know. Yesterday's low was 333. The June 4th screwworm low was 26 and a half, 26.30. So we're a nickel away out there. So the market's very, 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 very oversold. Roll down puts if you've got them. Don't lift them, because I'm not going to sit here and say, oh, don't worry, the June 4th low is going to hold. Just trust me. That's completely absurd. If that June 4th low fails, there's going to be more long liquidation. And lean hogs, I talked about this for the last 2 weeks. A very, very volatile trade out there in the deferred. The deferred did, in the last 2 or 3 days, has had repeatedly, big swings from 80 down to sub 78, back to 80. It's whipping around quite a bit out there. Again, it's a market that lends itself to using options versus futures, especially if you're a farmer, right? You're busy all day, taking care of your farm, taking care of your animals. Using an option lets you de-stress your marketing plan. Okay, guys, this is Chris. Have a good day. 312-638-8868. Give me a call. Thanks.